Broadcom's hidden AI goldmine. The stock's set to soar over the next 5 years. Imagine a future where artificial intelligence is not just powerful, but unstoppable. The secret? Blazing fast AI data centers. But here's the catch. AI computing power is hitting a major bottleneck that nobody's talking about. And one company, Broadcom, NASDAQ, AVGO, is quietly building the tech to break this barrier and fuel the next trillion-dollar AI boom. Analysts predict that Broadcom's AI business could 5x by 2027, and yet, most investors are sleeping on this stock. So, is now the time to get in before the next surge? Hi! In today's video, we're going to explore why Broadcom could be one of the biggest AI winners over the next 5 years. Welcome to the Finance Savvy, where we break down the most exciting investing opportunities in tech and AI. If you love making smart investment decisions, hit that like button, subscribe, and turn on notifications so you don't miss our latest insights. If you have any questions, drop them in the comments. I'd love to hear your thoughts. Now let's dive in. The AI revolution's biggest bottleneck, and how Broadcom is fixing it. We all know that AI is revolutionizing industries, from self-driving cars to advanced medical research. But there's a problem. AI data centers are hitting a wall. You'd think Nvidia's powerful chips would be enough, right? Well, not exactly. The real issue isn't the raw computing power. It's how fast AI processors communicate within a data center. Today's AI models are generating massive amounts of data, but the networks connecting these chips just can't keep up. And here's where Broadcom steps in. Broadcom's secret weapon, high-speed AI networking tech. Broadcom might not be the first name that comes to mind in AI, but it's absolutely critical to the industry's future. This company builds the ultra-fast networking hardware that keeps AI data centers running at full speed. Let's talk numbers. Broadcom's latest Brocade G710 switch can move data at 64 gigabits per second, while its fiber optic Ethernet platform handles a mind-blowing 51.2 terabytes per second. Translation: this is the infrastructure that will supercharge AI's next evolution. In December, Broadcom CEO Hock Tan projected that the market for AI networking components could be worth $60 billion to $90 billion annually by 2027. That's up to 7x growth from where it is today. And Broadcom is leading the charge. Why Broadcom could 5x its AI business by 2027? AI is only getting bigger. As more companies build AI-driven data centers, demand for high-speed networking hardware will skyrocket. Here's what makes Broadcom a potential multi-year winner. 1. First mover advantage. Broadcom dominates the AI interconnect space with virtually no competition. 2. Explosive AI growth. AI workloads are growing exponentially, and faster networking is non-negotiable. 3. Massive revenue potential. With AI networking poised to reach $90 billion annually, Broadcom's slice of this market could 5x within 5 years. And the best part? While everyone's focused on AI stocks like Nvidia and Palantir, Broadcom is flying under the radar. Savvy investors are paying attention. Should you buy Broadcom stock now? While no stock is guaranteed to soar, Broadcom has all the ingredients of a long-term AI powerhouse. A. Current AI revenue, $12 billion per year. B. Potential AI revenue by 2027, $60 billion to $90 billion. C. AI infrastructure is a must-have, not a luxury. The stock has already been climbing, but with AI demand accelerating, Broadcom still has serious upside potential. If you're bullish on AI's future, this is one stock to watch. What's next? Supermicro could be the next big AI play. Speaking of AI infrastructure stocks, have you heard about Supermicro, NASDAQ, SMCI? This company recently filed its delayed reports, and many investors are wondering, is now the time to buy? We'll break it all down in our next video, so stay tuned. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more insights. Got questions? Drop them in the comments. I'd love to hear what you think about Broadcom and its future in AI. I'll see you in a few seconds. Supermicro's AI comeback. Huge opportunity or too risky to buy? AI infrastructure stocks are on fire, and we just covered Broadcom's explosive AI growth in our last video. But today we're shifting gears to a company that's been on a wild roller coaster ride. Supermicro, NASDAQ, SMCI. This stock soared in early 2024, then crashed over 40% in just months due to accounting concerns, SEC investigations, and an auditor that literally quit on them. But now, after filing its long-delayed financial reports, Supermicro's stock is bouncing back, and some investors think it could be a huge AI winner. So, is this a golden opportunity to buy, or is this stock still too risky? Let's break it all down. Hi. In today's video, we're diving into Supermicro's chaotic year, its recent SEC filing, and whether this AI stock is worth buying right now. Welcome to the Finance Savvy, where we uncover the biggest investment opportunities in AI, tech, and the stock market. If you love deep dives like this, smash that like button, subscribe, and turn on notifications so you never miss an update. Got thoughts on Supermicro? Drop a comment below. I'd love to hear from you. Now, let's get started. Supermicro's wild ride. From AI darling to controversy magnet. Supermicro started 2024 as one of the hottest stocks on Wall Street, thanks to the AI infrastructure boom. Why? The company designs and assembles AI servers, integrating Nvidia's GPUs into high-performance systems. It was also an early pioneer of direct liquid cooling, DLC, a key technology for high-power AI computing. Everything was going great until the stock tanked in August. What happened? 1. Falling margins. Gross margins dropped from 17% to 11.3% as Supermicro slashed prices to win deals. 2. Accounting issues. A short report accused the company of financial manipulation and sketchy related party transactions. 3. Delayed financial filings. Supermicro failed to file its 10K report, raising red flags. 4. SEC and DOJ subpoenas. The government launched investigations into the company's finances. 5. EY. Its auditor quit, and they didn't go quietly, saying they had concerns about governance and transparency. This 1-2 punch sent Supermicro's stock into free fall. But now, things are changing. Supermicro files its reports. Is the crisis over? Fast forward to February 25th, 2025, Supermicro finally filed its overdue financial reports, narrowly avoiding a NASDAQ delisting. Here's what we learned from those filings. Metric: Fiscal 2025 Q1. Fiscal 2025 Q2. Revenue: Fiscal 2025 Q1, $5.94 billion. Fiscal 2025 Q2, $5.68 billion. Revenue growth. Fiscal 2025 Q1, 180% to 55% YOY. Fiscal 2025 Q2 still strong, but slowing. Gross margin. Fiscal 2025 Q1, 13.1%. Fiscal 2025 Q2, 11.8%. So what's the verdict? First, no financial restatements. That's a relief. Despite all the concerns, no prior earnings were revised. Second, internal controls still a mess. New auditor BDO gave an adverse opinion on Supermicro's internal controls, meaning there's still a real risk of financial misstatements. BDO's report also doesn't clear up whether the DOJ and SEC investigations are still active. Supermicro's accounting drama isn't over yet. Supermicro's big plans. Can it hit $40 billion in revenue? Despite all this, Supermicro's growth projections are insane. 1. Fiscal 2025 revenue target, $23.5 billion to $25 billion. 2. Fiscal 2026 revenue target, $40 billion. That's almost double the current year's projection. How? Supermicro is betting big on A. AI infrastructure demand. More AI data centers equals more servers. B. Direct liquid cooling, DLC. Their next-gen cooling tech is becoming an industry standard. C. Nvidia partnership they're shipping over 100,000 GPUs in new AI systems. This all sounds great, but is the company overpromising? The bear case, why some investors are still worried. Let's be real, Supermicro isn't a high-margin business. 1. They're a systems integrator, essentially a middleman reselling Nvidia GPUs inside servers. 2. Gross margins are stuck under 13%. 3. Revenue is growing, but profits aren't surging at the same rate. Also, big questions remain about their financials. Why didn't just walk away? They ran. That's never a great sign. And let's not forget, Supermicro stock is highly volatile. If AI demand slows or another accounting issue pops up, this stock could crash just as fast as it rallied. Final verdict. Should you buy Supermicro stock? So, is Supermicro a buy right now? Here's my take. 1. Bullish if A. You believe AI data center demand will keep exploding. B. You're comfortable with volatility and risk. C. You think the accounting concerns are overblown. 2. Bearish if 1. You don't trust the financials, which is fair. 2. You want higher margin AI plays like Nvidia, Broadcom, or AMD. 3. You think there are better AI infrastructure stocks out there. Personally, I think Supermicro is a high-risk, high-reward AI stock. If you believe in its growth story and can handle the volatility, it could be a great long-term play. But if you want a safer AI investment, check out our last video on Broadcom's AI dominance, a company with huge upside and way fewer accounting headaches. What's next? The ultimate AI stock showdown. Speaking of AI stocks, which is the better buy right now? Supermicro or Nvidia? Our next video will compare growth, valuation, risks, and upside potential to see which one is the better long-term AI investment. So, stay tuned for that deep dive. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more AI stock insights. Got questions? Drop a comment below. I'd love to hear your take on Supermicro.